Are you struggling to pass the CPA exam? Did your review course fail to fit your learning style? I'm Darius Clark of I-75 CPA Review, the #1 course supplement, where the right teacher makes all the difference. All right, here's a sim on depreciation recapture. In this sim, we're not going to be calculating the amount of depreciation, because sometimes the exam gives you the depreciation and you have to know what to do with it. For example, when an asset used in the business is sold at a gain, the depreciation that was taken during the life of the asset has to be recaptured as ordinary income. Then, once we do that, there might be a Section 1231 gain. But before we can say that the gain from the sale is a Section 1231 gain, we have to recapture depreciation. So if on the exam, your client sells a building or sells equipment, there's going to be depreciation recapture, but the rules are not always the same. What we recapture for equipment is not going to be the same as what gets recaptured for a building. And a corporation selling a building, there's different recapture rules than an individual selling a building. So for these reasons, I think depreciation recapture would make for a great sim on the reg exam. So let's start with equipment, and equipment would be the same rules whether it's an individual or a corporation. So Edgar sold equipment used in business for $13,000. The equipment cost Edgar $10,000, and Edgar had properly claimed maker's depreciation deductions totaling $4,000. And question 1 wants to know, what is the amount of gain that should be reported under Section 1245 and Section 1231? Well, Section 1231 is the bigger picture. That just means you sold an asset used in business and you owned it for more than a year before you sold it. Section 1245 means you sold that asset at a gain, and that asset is equipment or furniture or a truck, something other than real estate. So the minute you see Section 1245, it means one of these Section 1231 assets were sold at a gain and the asset was not real estate. So how much gain should be reported under Section 1245 and how much should be reported under Section 1231? So before we break out the gain between two parts, Section 1245 and Section 1231, we need to calculate the total gain. We know the selling price, the proceeds, was $13,000. So that's what was realized from the sale. Then we'll subtract the basis. How do we get the basis? Well, the cost was $10,000. The depreciation taken was $4,000. So that gives you a basis at the time of sale of $6,000. So if you subtract the basis of 6 from the amount realized, $13,000, you'll get a $7,000 total gain. So all $7,000 is going to be recognized, but now we have to split it up between Section 1245, which gets recaptured as ordinary income, and the rest, which would be a Section 1231 gain. And the rule is for Section 1245, all depreciation taken, in this case $4,000, is recaptured as ordinary income. So we're going to have $4,000 of ordinary income, and the remaining gain, $3,000, is a Section 1231 gain, and would qualify as a capital gain if there were no other Section 1231 gains and losses for this company or for this individual. So notice the total gain was $7,000, and all $7,000 is going to be taxed. $4,000 of it's going to be taxed as ordinary income, the other $3,000 as a Section 1231 gain. In best case scenario for that $3,000, it may be eligible for long-term capital gain. But we don't know yet. Right now, all we know is that it's a Section 1231 gain. All right, question 2. Very similar facts to question 1. Edgar sold equipment used in business for $13,000. The equipment cost Edgar $10,000, and Edgar had properly claimed maker's deductions totaling $4,000. So far, everything's the same as the previous question. Now here's a new fact. Straight line depreciation, if it had been used, would have been $2,500. So the total depreciation was $4,000. If they had used straight line, $2,500 would have been the depreciation. What is the amount of gain that should be reported under Section 1245 and Section 1231? and we'll approach it much the same way. The amount realized, the sale proceeds $13,000 minus the basis of $6,000 equals a $7,000 total recognized gain. Now, how are we going to recognize this gain between Section 1245 and Section 1231? Well, you got to remember, for Section 1245, all depreciation taken is recaptured as ordinary income. Well, how much depreciation was taken? $4,000. Yeah, but they told us that $2,500 if they would have used straight line, but that's a distractor, because under Section 1245, all depreciation taken is recaptured as ordinary income. So you could ignore that part about straight line depreciation, because under Section 1245, when you sell equipment or a truck, that's completely irrelevant how much straight line depreciation would have been. So out of the $7,000 total recognized gain, $4,000, the amount of depreciation taken, is recaptured as ordinary income. The remaining gain of $3,000 is a Section 1231 gain. And once again, it would qualify as a capital gain if there were no other Section 1231 gains or losses. But the big news here is, note that the information given about straight line depreciation is a distractor under Section 1245. You'll see if we were depreciating a building, then the information about straight line depreciation would come into play. And if you watch this sim in its entirety, when we get to the sale of the building, you'll see the difference. So make sure to watch this sim to the very end. In question number 3, it's similar facts. We're still selling equipment, but this time the equipment's not sold for $13,000, it's sold for $9,000. That's really the only difference. The sale price is only $9,000. The equipment cost Edgar $10,000, and Edgar had properly claimed maker's deductions, depreciation, totaling $4,000. So all that's the same. They even tell us straight line depreciation, if it had been used, would have been $2,500. What's the amount of gain that should be reported under Section 1245 and Section 1231? So this time the amount realized is only $9,000, and when you subtract the basis of 6, you get only a $3,000 recognized gain. Well, for Section 1245 equipment, we're used to taking all depreciation taken, which would have been $4,000, and we'd be recapturing that as ordinary income. But what's the problem here? This time the total gain is only $3,000. So how much are we going to recapture under Section 1245? The total gain of $3,000 or all the depreciation taken, $4,000? And the answer is the depreciation recapture can never be higher than the recognized gain. So since our recognized gain is only $3,000, that's what's going to be recaptured as ordinary income, $3,000. And we'll have nothing left for Section 1231 gain. So just when we get used to recapturing all the depreciation taken as ordinary income, we've got to remember that we're limited to the total recognized gain. The amount of depreciation recapture can never be higher than the recognized gain. Okay, now for a building. Now Edgar's going to sell a building used in business for $110,000. The building cost Edgar $100,000, and Edgar had properly claimed maker's deductions totaling $40,000. What's the amount of gain that should be reported under Section 1250 and Section 1231? And if you think you know, leave me the answer in the comments section. And if you found this video helpful and want to see the rest of this sim, go to CPAExamTutoring.com and get yourself on I-75, where the right teacher makes all the difference.